The following is a presentation of TFNN.
Welcome, folks. Steve Rhodes, Tom O'Brien, all you tigers and tigresses. We appreciate you growling and prowling out here with us. And, of course, we got Carlos. That's from the Tom O'Brien School of English.
I love it.
That poor guy. He's a beautiful thing. Can you imagine? In California, he's got a Boston accent.
I love it.
We get the Dow down 35. Nasdaq's off 11. S&Ps are off 5. We get gold down $16. Silver's off 37 cents, that is. Bonds just refuse to back off. They were down 15 ticks. Right now they are down 4 ticks. King dollar on the move again, up 3 ticks at 79.23. It got off that low last week. Had some strength yesterday. They're trying to hold it down, but bottom line, they're having a tough time.
Yeah,
and they got
and Germany just gave it up. Had been positive really most of the day. Since it's open, it's down 25 points right now.
Yeah.
What's going on over there?
Well, what you had, the European Central Draghi come out and said, hey, listen, things are okay, but they're not great, but don't worry. Don't worry. Be happy.
I like that. Don't worry. Be happy.
And that was the worst thing he could have said. And that smoked the markets in about 2 seconds, folks, because there was no fix. There was there's no more money. There's no more. So they got a problem. They got a big problem too. Because when you don't have growth, you have big problems. Now, you get gold down $16. See, the correlation here, folks, is really cool because the dollar's up. They try to keep the euro up, but the euro is not. It's a flat-out inverse correlation. When the euro's down, the dollar's up and gold's down.
Right.
When you see all that, if you wrap your head around these currencies, Steve and I, we talk about them every day. You really can learn a lot. You see how these markets just flip because it's all about what you can buy with a currency. I mean, think about why you work. You don't work to just keep the money. If you do, you better rethink that whole thing, folks, because money is just to do what you want to do.
That's for sure. That's right. Absolutely.
So that is the equation, the larger equation inside, these markets.
Yeah. No, you absolutely need to understand. Well, if you were a intraday trader, you absolutely have to understand the currency markets, understand the patterns that are out there, because they are what are going to give you, the biggest clue out there from a directional standpoint.
And it's a huge edge.
Yeah, it is a huge edge.
It's a huge edge because the understanding in the markets, it's there somewhat, but nothing. I'd say we're talking. I don't know. It's hard to really put a number on it, without speculating. I don't know if it's 5% or 10%. It's not more than that. I would say that flat out that really people don't understand, and it's not hard to understand, folks.
No, it's really not.
Just take your time with it. It's not. It's not.
Exactly. No, it's not.
That's wild, man.
So I'm pretty sure you weren't up as late as I was.
Oh, for the hockey game?
Yeah.
Yeah, I wasn't, but I was thinking of you first thing this morning. I know. That had to be amazing. Was it 3 overtimes?
3 overtimes.
3 overtimes.
Almost to the end of the 3rd overtime. 5, 6, 7 minutes to go, or what have you. And the problem with that, it's like watching a movie that you can see it some other time.
Right.
And you start watching it and you say, well, okay, maybe I'll turn it off, but you don't turn it off, right?
Right.
You get in the problem with the hockey games, and I've mentioned this before, is the overtimes, when they go to that first overtime, it's usually over in that first 5 minutes, or it just simply goes on.
And then they get tired. Yeah.
They do get tired. That's when you've played 2 hockey games in one night, with the intensity level that those guys are playing with.
Exactly.
It is amazing just how, they are absolutely incredible athletes.
Right.
I think, the best athletes on the planet.
No, I agree.
And until you've gone up and down the ice a few times, and you understand the
actual
heat. Oh, yeah, the heat and the pain that's going on in there. You understand why they're on the ice for, 45 seconds, 60 seconds.
Big time.
You talk about A to B, quickly,
Boom.
acceleration.
Right. Huge.
And the speed that's out there. So it was one of those things where I couldn't put the game down.
But you know what, folks? He's all set this morning. You know why?
That's right.
Because I came in, first off, so I was working out with Nico this morning, which I normally do a few times a week, 3 or 4 times a week. And you know what he had for me this morning, folks, as soon as I come in there? He had a stick of butter. So I walked home with a stick of butter.
Yeah.
And
you came, into the office this morning with a big smile.
Well, you should see this too, folks. Well, what happens is that I walk down to Nico's from my house. Well, I drive the car halfway, and then I walk the rest of the way because I walk with my dog.
Yeah.
And so Harley hangs outside while I'm inside.
Yeah.
And I come outside with a stick of butter. Harley is all excited, man. He thinks he's going to get the stick of butter, right? You talk about, something attentive. The whole walk home, right?
Yeah.
He just keeps looking up like, come on, you're going to give me that stick of butter?
Yeah.
Make a long story short, I get in the house. Angie said, hey, how'd you get the stick of butter? And I had already told her about the bulletproof coffee.
Yeah.
So bottom line.
Is she a coffee drinker?
Yeah, she loves it. Yeah.
All right.
And after today, and bottom line, folks, we made it. Gave Steve some, so he's all set for the day. I'm all set for the day, and it is insane.
It's a good thing we got a little padding in here, for the sound, because in case I do bounce off the wall.
So, you know what's amazing, folks? When I was putting it in, I love butter anyway. Okay, so when I was putting it in the, you're supposed to put I was supposed to put, I'm not sure, there's 2 or 3 teaspoons.
Yeah.
Bottom line is, it looked so good in there, and it was, feeling so good. I says, yeah, it melts. That's what it's supposed to do. It's supposed to melt.
Yeah.
Mitch is asking, it melts. It makes it nice and creamy. And anyway.
And what's interesting is when we first started talking about it a couple days ago.
Yeah.
Even in my mind, kind of like Mitch was asking, does it melt? I was kind of thinking, maybe it how does this work?
Yeah.
But when you brought that cup,
isn't it pretty?
I was like, well, this is
yeah. And hey, listen, you
gotta try it.
I know all you Starbucks executives are listening out there. We don't want you stealing our idea. Well, it's the other guy's idea. But I'll tell you, can you imagine how expensive it would be now? I pay. I think my coffee's $5.40 a day. Now you got to put a quarter cup.
Okay.
No, a third of a stick.
I've really never paid attention to how much butter is. So.
Yeah. Like $4 a pound, I think. $3 a pound. Yeah.
Oh, we're drinking, but we're drinking good butter.
Oh yeah, Irish butter.
Yeah, we're drinking now. So this is we gave away the formula for Cinco de Mayo, right? We got the tequila and the guacamole followed up the next day.
Okay.
With superhuman.
Yeah.
Super bullet coffee.
That'll be interesting to see how that shakes out, man. So listen to this, folks. This is pretty funny. So in the morning, there's 3 of us that are always in the gym, and I said to Nico, I said, did you tell Manny about the tequila? Oh, I tell you, man, that's a beautiful thing. What a way to start the day.
Now, for me, I would rather. I'm not much of a hard alcohol drinker.
Yeah, you like that
beer, wine.
Yeah,
and ouzo,
right.
Sambuca.
Right.
But I do like tequila. I would rather much have a shot of tequila than a margarita.
Oh no, margaritas are way too sweet for me.
Yeah.
I like tequila. Tequila, you put it in the freezer. And you're all set.
Yeah.
I think the show's turned into
Alcoholics Anonymous.
All you folks driving to work on the West Coast at 7 o'clock in the morning. Okay, make sure that you don't have your balls of tequila in there.
That's right.
Oh my God. Well, you know what? The market is certainly drinking something, and it's not tequila because this baby's getting hit, and it's getting hit big.
Yeah.
You get gold down $20 right now. The S&Ps are taking it south. But you know what you're going to have here?
One big sale, one big push down came in at the 10 to 10:05. So just as we were coming on the air,
yeah.
Even we got the diamonds up here, and on the 5-minute chart was 373,000 shares. That was the big push, and now it's just kind of volume-wise, it's backed off a bit. It's still just coming down, into that big breakout. And
right.
I know you went back and took a look and tried to put together the actual trade that was on out there.
Yes.
Still hasn't been able to break through that.
No.
At least on the diamonds, the spies tested it. The small caps, I believe, got well underneath it.
Oh, the small caps are nasty.
Yeah,
the small caps, folks. There's no doubt. It's whatever's happening underneath this market right now in the small cap arena is a big problem.
Yeah.
And,
also a big problem if you are a holder of Green Mountain Coffee.
Oh, man.
Roasters, talk about the guys that need it. When I did the ABC this morning on it,
yes.
Well, these guys are going out of business.
Yeah.
Because it's the ABC gets to minus $4.
Yeah, well, it's going to 10 for sure.
You don't do ABC.
It's a 20 now. It's going to 10.
Yeah.
And, yeah.
So there's a $120 stock at one time.
Right.
You know.
Right.
And yeah.
Well, you know,
and it gave you the opportunity to get out. If you didn't have a stop in place after its first thrust down, it at least did a dead cat bounce up to the $70 area.
Imagine it doubled, 34 to 70.
Yeah.
With zero, folks. All it did is fill the gaps. So you really want to wrap your head around this. And I'm not talking about even if you're a trader. If you're an investor, all you have to do is know where the high volume is. And if you are in an equity that you have a high volume low, get out of town. Okay. Because this is a classic case, and this is an anomaly, folks. They don't let you out.
Yeah.
And there's not one person that does this. It's just the market. That's how the market reacts.
Yeah. And what you can do is, on that, so let's say you didn't have a stop in place on that down thrust.
Right.
Where you had that high volume. You can put a stop. You need 2 stops in place. You need your exit. You need 2 exits in place. One is your stop if it continues lower, and the other you can just simply take a look at, just simply a dead cat bounce. If it does bounce, it's going to make a 38% retracement, and have your sell in there, and just be happy, that you recovered some of your money. Either way, and if it continues moving lower, just be happy that you're not going to ride it downtown all the way.
Yeah, and the hardest thing to do in an area like that, is that you think that I'm down money. What you have to do, folks, is you have to say, yesterday's gone, tomorrow's not here, what do I have right now?
Yeah.
What do I have right now?
Yeah.
Because that's all that matters, and I know that's not easy.
Right.
But the fact is, the more you get used to that, the better off it is. And what happens is that once you get used to that, let me tell you something. Your life is, and I'm not just talking about in the markets. I'm talking about period.
No, absolutely.
It's a lot easier because you say, okay, that's cool. Well, let's this is what's going on right now. You know, and let's go groove with it.
Yeah. Let your first mistake be your worst mistake.
Yeah. And what happens? Sometimes not even a mistake.
No, I understand.
It's a mistake if you stay in it. That's right.
That's what I'm saying. That's exactly what I'm saying. That's right.
Steve Rhodes, Tom O'Brien, all you tigers and tigresses, we appreciate you growling and prowling out here with us. You have a great day, safe day. You stay right there, folks. We're coming right back.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. We appreciate you growling and prowling out here with us, folks. We get the Dow right now down 51. Nasdaq's off 16. S&Ps are off 6. We'll see if we get any juice on the way down right now. Volume-wise right now on the NYSE is at 150 million, which is not a huge amount. Nasdaq's 357, which is not a huge amount either. But what you do have is that when you get selling this quick, it's going to have a shot to get some juice on the way down.
Yeah. So Apple, they're holding the Apple up, a bit. I don't know what kind of volume you've got in Apple, and so it's trading up a buck right now.
And that's
just trying to fill that gap.
Yeah. And that gap's wide open, and it's going to get filled. And what you'll see, this will come out of nowhere too. When you get this close, folks, when you're in a gap, number one, a gap is just like, particularly the gap down, it's just like a big magnet. I mean, it just pulls it down there. I can tell you this, anyone that's been in the market for a while, there's no monster that's going to come in and make a big buy when something's in the gap. Yeah. It's just not going to happen. They will buy like crazy when it fills the gap. They'll sit there, with an order. Now, what their problem is, this gets interesting. So what their problem is, look at this. So what their problem is here, folks, that's a 50-day moving average. Okay, so they
don't want to buy when it's underneath it.
Yeah, so it's a huge problem, because in order to hit the gap, it's got to go underneath it. Now, Apple has not been under the 50-day moving average, except for 2 days. All the way back to when Apple was trading at $387. Okay, so that is a big problem for it. And right now, that 50-day is out at. So what do we got? It's right there, man. I mean, it's 4 points down. It's 380. It's 582.96.
Yeah. Yeah. Now, as Apple, as Apple gapped up, okay, and it started moving down, okay, and try to fill that gap, for 3 of the last 5 days, you had volume picking up as it was moving down in to fill that gap. Yesterday, not so much.
Right. Absolutely.
It really lightened up. And when you take a look at that candle on April 24th, 38 million shares, yesterday did
shot
15
number.
Million.
Yeah,
shares.
Exactly. Shot number. Right.
No doubt. Which is pretty.
No doubt. And the key is, though, when it's not there.
Right. That's right.
So that's
it's not any, just kind of some information.
But it is coming into a lighter volume. There's no doubt about that.
Yeah.
So We take a look at some of the high-volume stocks we have out here today, even though we don't have high volume, but inside that context, Green Mountain is the monster. That baby's down. Look, I mean, that baby is almost, you're talking about 40% in one day. One
absolutely.
day.
Well,
oh, here's another one. Oh, Prudential. You got to see this, folks. I was talking about this last night. Prudential. So check this out. Prudential is down $5 right now, 10%. Was as low as $53, okay?
Coming in that high volume.
Coming right into high volume lows that are out there. Someone already knew something going all the way back to January 26th. But check this out. I just want to see if... Okay, so last night when they came out with their quarter, right?
Yeah.
I get the story here. What the story was, folks, is this. Is that they put out that they had gone from a net income of $561 million last year to a net loss in a quarter to $967 million. So they had a almost $1.5 billion swing. Now, inside the...
But was that measuring quarter to quarter, or was that a year?
Year to year. But it was quarter because it wasn't in last quarter.
Okay.
Okay?
Yeah.
And all they said is that it was a loss on a derivative.
Okay.
So I'm saying to myself, this is amazing. This stock's going to get killed, particularly because they weren't saying what the derivative was.
Okay.
Okay? And, folks, what ends up happening with derivative positions, the way you want to look at a derivative, well, you can't... I can't say it's the whole way, because you can have derivatives that aren't leveraged. But anyway, when you see a loss like that, you know something's leveraged.
Yes.
Well, what ended up happening is that, let's see if they say anything this morning. Well, Hartford Insurance came out with numbers after the close also. And in Hartford's case, they also lost money. But you can see Hartford's only down 34 cents.
Yes.
And what the difference is, though, check this out. So Hartford come out and said, yes, we have a derivative position too, and they said what it was. It was a currency position that they lost money on. Now listen to this. This is a swing also. They went from let's see, first quarter net income dropped $96 million, 18 cents a share. 34. I'll find this. Bottom line is that they lost money also.
They were short the yen.
Is that what it says in there?
Well, I'm guessing,
okay.
I saw yen pop up.
Okay.
So if that was their trade, and you had the biggest weakening, inside the yen,
right,
moving up.
So in that aspect, I says, you know what, man, that's what's going on is that the Prudential one more than likely is a currency loss also. And you know what? Currencies rule the world.
Absolutely.
But you know what? They're on the wrong side of the trade. And you're on the wrong side of a currency trade. You don't close it.
So you wonder if it all happened as a result of...
the yen getting stronger.
Well, but it also insured issues when they had the tsunami out there, and they were just trying to hedge that additional loss.
Right. Stay right there, folks.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. We get Steve Rhodes, Tom O'Brien, and we're just looking at Sears Holdings, folks. And if you're in Sears Holdings, you better get out of the way, too. Because on a longer-term basis, folks, Sears, you're at 58. It's going to run into 54. It's down $3 now. And if it has the same kind of juice that it has, I mean, you get a high-volume low at 28. And the stock's down from 200. And I know dead cat bounce is a beautiful thing, but you know what? There's nothing here.
And really what you're actually showing, why people should really be paying attention, is because what you did is as we're taking a look at Sears Holdings, it's really what folks ought to do. Because first we took a look at the daily chart because you had gapped up with some volume a couple days ago.
That's right.
And that was really kind of said, oh, I noticed that. Didn't Sears gap up, you know?
Right.
And now this morning it's down 5%. So if you had only paid attention to the daily chart, okay, you might have tried to buy this. Then you went from the daily, then you went to the weekly, then you went to the monthly, and you said, oh, okay, wait a minute here. And that's what folks need to be doing, you know, when they're trading. You need to make sure that you're going up a couple levels just to get the larger picture.
Absolutely. And when you take a look, see, yesterday you went to 65, you closed at 62, you had 4.8 million, but you know what? That wasn't enough because you were going into 8.2. And you had the gap down. And all this is a dead cat bounce. That's all it was. Pretty crazy, man. You know, Sears has been dead meat forever. I mean, that stock was a $200 stock. You know? And, you know, I'm sure, you know, what ends up happening when you're buying Sears, he paid a bunch for the brand name, a bunch for the Kenmore.
Right.
And, you know, the real estate's probably worth, you know, whatever the stock's worth, $20 a share or something.
Yeah.
You know? We got our man, Larry Pesavento. Larry, what's going on?
Hey, fellas, what's going on?
How you doing, man?
Oh, man, it's great. Everything's cool. Hey, listen, I want to alert you guys to what I see in the commodity markets is that we hit major stuff here in crude oil and gold this morning, and also the euro. At 131 in the euro, and the gold at 16 35. If we go below these numbers that we've made, in other words, if market starts to weaken later after this first hour of selling,
yes,
you got to, your stock people got to be very careful, because that's what started this thing down in 07, and with margin call selling, and the commodity markets, beans have weakened up badly, so has wheat and corn.
Right.
And so you've got to be really careful of potential of margin call selling in some of these things, and take a look. The real key, Tom, is the April 23rd low in the stock market, which was 1352 in the S&P futures. I mean, we're really a long way from there, 50 points, but this it's a real wild day today, and it hits some major support. If this support holds, that's really good, because then everything's all right. But
and see, what Larry's talking about, folks, I have a bunch of the futures up right now, the commodities up, and you can see, orange juice is down 4%, nickel's down 2.5%, coffee's down 2%, crude's down 2%, silver's down $1.30, copper's down $1.30, heat and oil's down $1.10. Gold's down 16, but it's only a 1%. When I say $1, folks, I mean 1%.
Right.
But there's some destruction there. Yeah, and we've been in a commodity bull for 10 years, and there's no doubt, man, those commodities pull back, and it's big problems for the marketplace.
Well, I just want to let you know, fellas, and I hope I'll be back in the game on Monday.
Hey, listen, I got to know, how the heck did you get a cold out in beautiful Tucson?
No cold. I was attacked. I was mugged, Tom.
You were mugged?
I was mugged by 2 Palo Verde trees out in front of my house. They were in bloom, and I went for a swim, and when when they caught me, they took me and shook me up in the leaves, threw me down on the ground, and
you know what? That must have been one of those bulls that want QE3.
It could be. I never had an attack like this before. I've had sniffles.
Well, that's definitely one of those bulls that want QE3. Then you know what? I know what that was, folks. You know what that was? Hey, Larry, that was those Catholics that are running the market. That's what that was.
There you go. Yeah, I always believe in those guys.
Larry, in the den, they're giving you a remedy here. They're suggesting maybe a chainsaw.
For the poor tree.
For the tree.
The first day I would have cut off my head to stop the coughing, but
that's terrible, man. That is wicked.
I'm a lot better off than most people. So what the heck?
Cool, man. Hey, listen, tell Sarah we said hi, man.
Right, thanks for calling.
Bye-bye.
Okay, thanks for calling. Have a great one, man. Have a safe one. You know what is amazing is that whatever the power of that pollen is, I mean, that really hurts people. That can really put a number. I've never had a problem with it, but I can, Angie does, Tommy does. I mean, you can see that whatever, it's interesting.
Yeah, I don't have any allergies, at least that I know of.
Yeah, me either.
And, But folks that do, you're just like, oh my goodness.
Oh, it's intense, man.
Always sniffling, always.
It's intense, yeah. And then they
and we've got plenty of it in Florida.
They could look like raccoons with your eyes, right? I mean, it's a crazy.
In Florida, you just you leave your car out or something overnight, and you get this just yellow film, all over it.
Right.
It was pretty good. As we're already into May. I saw my first love bug last week. But I haven't really seen much. I probably shouldn't be talking about it.
No, that's right.
We got this thing down here. Love bugs, they're called, folks. And they're just and they're twice a year in here for maybe about 30 days. But they're nasty because
you should see them. It's like a
and we live in love.
It's like a Hitchcock horror movie, folks.
The birds.
Right? It really is. There's no doubt about it. Oh man. Well, they continuing to whack the gold market. If we go look at the XAU, it's just you talk about this thing has been down, and I mean. It's real possible it's going to go break another low. The XAU right now is at 158, 157.12 is game. The HUI. And see, this is just screaming to me, man, that the gold has led the whole deal lower. So it's, and see, the HUI is at 426 right now, and 422 is the number. And, it's just looks to me that, and look at Gold Corp, man. Gold Corp, this stock's gone from 55 to 37, with the price of gold still at $1,600. There's something seriously wrong, in that market right now. It looks, my take is that where this is going, folks, okay, my 825 in the S&P, well, gold is going to that same time frame. And what that time frame is the May 2010 time frame. That's what it's trying to get into, and it's really right now. It's right next to it, so it's amazing.
Yeah. Now the XAU, and I've also got that up on my screen here.
Yes.
And it really is at a critical stage, because when you take a look at my hammer candle,
right? Yeah, that's right.
It did on April 23rd, and it did that as it was basically making a 1.272 butterfly pattern.
Right.
And that's really coming off of the last swing point low out there, folks, going back to October 4th. Well, we know October 4th makes a lot of sense.
Yes.
Right? I mean, that's a key date for us that we take a look at,
big
as far as lows in the marketplace. So when I just simply take a look at the XAU and I use October, when I was just when I pulled up that chart, and I was like, whoa, this is kind of interesting. So it made sense to use that as the swing point. And even though on my chart here, if you're looking at it on Tiger TV, you're going to see 1.32. It's really, that's close enough to me to be a 1.272, 1.3. To me, that's close enough, and it also makes the A to B equals CD, off of the high that it had back in November 2011, makes a low coming into December 29th. That also makes a lot of sense. So it makes the 1-to-1 A to B equals CD. It has everything. Yep. And then it does that, and it's got that hammer candle.
And if it breaks it, it's big trouble.
Yeah, because if it breaks it, folks, what it actually is signaling, and this is why it's so great to be able to, take the sacred geometry. What it signals to you is that where it's going to head to is going to head to 143. It's at 158 right now.
Right.
Now that's a pretty large move.
Oh, you got to crack up. If you look at this week's gold report, I said it's going to 143.
Did you? Oh, did you?
Yeah.
Oh, I love it. I love it. Totally. I love it.
Now, folks, you got to love this. This is my assistant. Her name's Kathleen here, right?
Yeah.
She keeps my calendar. We go back and forth. So I get a new calendar, and on the new calendar, it looks like it comes on my phone or wherever I am. It looks like I got candles.
Okay.
So I said to her yesterday, I says, hey, I says, you better talk to Steve because he owns all those candles.
That's right.
Did you hear this?
No, I didn't.
Oh, this is hilarious.
I did that.
So picture this, folks. I said to Kathleen, I says, you better talk to Steve because he owns all these candles. And I'm looking at my phone. And she says, he does? I says, yeah, there is his candles.
I love it.
And she's looking at me like, wow, okay, I'll go talk to him. I was just kidding with her. But it was hilarious. I was having so much fun with it. Oh, you gotta love it.
I love it.
I'm telling you.
But I love the fact that you put in the gold report 143. And that's what this shows here.
Yeah.
I mean, and that is what's so great about these patterns. It's what's so great about understanding, expansions and contractions and just using the summation index.
I know. But let me tell you, even when I was doing it, I'm saying to myself, man, that's a long way down still. You know what I mean?
Exactly.
And, it is a long way down, folks, okay? If I put this in a monthly, you'll see where I'm coming here. And put the volume underneath it.
Yeah.
And what you're going to see, it's pretty clean, when you set it up, because when you set it up, there she, it's the March 09, not March 10.
Yeah.
That's 142.14.
Yeah.
Now, what you have here, see, I know, it's sick. See, when you drop, what happens, folks, if you can't bust it up, you bust it down.
Right.
You dropped out of the range, okay? And the next swing point, you can do it two different ways. You got one swing point at 144.55, which is the swing from February of 010, and then you go over the other side of March 09, and you get the 142.14. So it's like...
Yeah, which has more volume in it, so...
Exactly.
It would make more sense.
That's where I went.
Yeah.
Right. Because the thing that's cool about this is that no one will want to buy it.
Right.
That's the cool thing about it. The destruction.
Well, and actually, natural gas. So you can go take a look at natural gas. I mean, that was one of the commodities that was up this morning. Up 3%.
Right.
And I know we tried buying that a few times. And
oh yeah, I was trading that quite a bit. And now the real key is going to be. See this spike. Well, what's this? That it couldn't make it, and someone just sold 13,000 contracts right into it.
Yeah. Well, if they've been playing it since it's bounced, it's been some good bread.
Yeah. No. Oh, big time. You kidding me? Natural gas, folks, you talk about dollars per point. Oh my God, it's intense. So if it backs in, you got to back into about 15.20 in the UNG versus 16.69.
Yeah.
So.
Now, were you talking about Sony?
Let's go look at Sony. Sony's getting there. 1550. Volume is dying on the vine. You know, we had a couple tigers. They start stepping into it. They're going to scale into it.
Yeah, okay.
What Sony is doing, folks, is that, you know, it's testing that 09 low of 1564.
Yeah.
You know, and you only want to step into this because what you want to do, I mean, scale into it, because what you definitely want to do is, which I said to them, you want to line this up with the yen, and I think the yen, you know, can go to 78.
Exactly.
And line it up with the Nikkei. That's when you, because the Sony trade has everything to do with the yen. Everything.
Yes, that's right.
You know?
That's right. Yeah. So so that's why you want to, when we started when we started the show this morning, we were talking about currency and understanding the currency trade.
Exactly.
So that's a real important. So at this stage here, you would suggest that they don't scale in until you get the other things.
That's right. No, that's right.
Okay.
The people were calling, they were doing it, period. But I would wait for the yen to get down there.
Yeah.
Because the way that the Nikkei looks to me, beautiful acceleration up to 10,200. But you know what? That wants to come back to 8,900. Good. Yeah. Just wait. Because no one, you know, patience, we know, is the name of the game.
Good.
Hey, talk to me. I know your Master Trader series.
Yeah.
You got a one-day worldwide Master Trader coming
That's right. May 18th. So it's on a Friday, so it makes it easy for folks to take some time off work. It's something that will be archived for folks, you know, on their homepage for 30 days. So that way they can watch it. It's all about becoming a master of the C to D leg.
Right.
And because buying and selling the D points, folks, is really, in my opinion, where it's at. When I take a look at all of the tools, everything I've learned from you, everything I've learned from Larry, and you put all that, and my candles, okay, that's really what it is that I'm going to teach. And what the cool thing about that is you already have 3/4 of the work done for you. You've allowed the market to give you 3/4 of the puzzle. And so it doesn't matter whether you are a beginner, you know, and you're wanting to empower yourself and you want to learn how to trade these markets, then what you really want to do is you want to attend, in my opinion, you want to attend that workshop because when you take a look at the number of hours and everything that I put into it, to me that is the absolute best and easiest thing to be able to teach, to be able to train, to watch the light bulbs go off in people's eyes.
It's huge.
You know,
and listen, I wish it was around when I was start trading the market. I mean, it's totally different now, folks. Just so you understand, you know, now compared to 20 years ago, it's like it's day and night.
Yeah, and I'm going to put together a little video that we'll send out to all of the folks that are Tigers on. We'll probably send it out over the weekend or on Friday or something.
Right.
And what I want to show folks is, because I know we have all different types of traders out there.
Yes.
Some people are just trading ETFs. So I'm going to show you an ETF. I'm going to show you one that's current right now and show you how it works. I'm going to take a look at a commodity, show you how it's working. Maybe I'll just take the XAU. We've got that popped up on the screen.
Right.
You know, and I'll show you 4 or 5 different instruments and different time frames so that people can really understand that it happens day in, day out.
I know.
And it's just like going fishing.
All you engineers out there, you engineers rule.
Oh, baby.
Well, you know, it's a funny note. For what we do, folks, you know, all you do have to do, I'm not kidding, if you believe in numbers, and that's why I say engineers rule, because they believe in numbers, you wouldn't believe how much easier the market is. I mean, it's a fact, you know what I mean?
And just be patient. You just wait for it.
Oh, yeah. And folks, don't be scared about that.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Rand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Kate Stalter on the Small Cap Roundup, Tuesdays and Thursdays, 11 a.m. Eastern. Up next on TFNN.
Steve Rhodes, Tom O'Brien, and that's right, you just heard our Tigress Kate Stalter is coming up, folks, with the Small Cap Roundup. Kate just came out with a new newsletter. It's the Low Price Leaders. You can come over to our website right now at TFNN, test drive that 2 weeks absolutely free. And, folks, stay tuned because she's got an absolutely outstanding show.
Let's go over to Spain. Let's go take a look at that IBEX. Did you get the volume on that, right?
I do. Well, you know what?
Yesterday was testing the swing point.
So listen to this. When he just said, "Let's go over to Spain," folks. Hey, let me tell you how I set up a trade. We just opened a Tiger Real Estate Fund.
Yeah.
And if you're an accredited investor, folks, and you want information, just email us at tigerfund.com. But that trade there, folks, I've been setting up for probably 4 or 5 years. Yeah. I've been working on it for about 1.5 years.
Yes.
So listen to this. This is funny. So I'm watching Spain, right? And I'm saying to myself, this is going to get interesting because, I rode, the gold market 10 years. I'm figuring I'll ride this real estate, probably another 10 years. But you know what? The next 10 years after that, we're going to ride from the United States and ride over to Spain and Ireland.
I love it.
Yeah,
I love it.
Exactly.
See,
Spain hasn't come to the realization yet, folks, that it's dead meat. So I'm saying to myself, well, that's going to be pretty cool, man. We'll ride the United States for the next 10 years in the market.
Yeah.
Flip that around. Go start riding Spain. Yeah. Ride Ireland, Get a few, anyway.
You buy them when they don't want them.
Yeah, totally, man. I mean, it's weird. I mean, but, cash flow positive is a beautiful thing.
Yes.
You look at the IBEX, folks. The IBEX is, in big problems. Okay, so watch. Yesterday,
it did have some volume.
Yesterday, you did $404 million, and you took it out with 323.
Yeah. So you still did you close below yesterday?
We closed at 68.31 and no 68.11. But the way
but volume wise, yeah.
Yeah, volume-wise, you had. I mean, it's going to be down there again.
Yes, that's right.
What is set up here is just over the top.
Yeah,
I mean,
because even on the weekly, how we doing?
Yeah. Right? Oh, here, you know what I can do? This is what I did. Oh, watch this, folks. We'll go right inside. I did this yesterday.
Okay.
So if we go inside and we go look at a few of these equities, some of them. Let's see, what's this one? Okay, so some of them are trading. Well, the ABC structure on the way down. Okay. Gets you to the 1995 levels, and
that's intense.
Oh, it's intense. It's over the top, man. So this one here, okay, this hasn't even been around long enough. Well, let's see if I can. Yeah, well, this has only been in business since 2006, and that's the. Let me pull up the next one. The banks are
the ones that are taking the biggest heat.
The banks right now are already at 1995 levels. It's 2013, 2012.
Yeah.
And what that's telling me though, it's telling me that what you also have is that ABC down.
Yeah.
On the large one is going to break.
Yeah.
Because if the banking structure is down there. And that's what that's type of speculation, folks. There's no doubt about it. But you got to remember something. If the banks are down there, they got big problems. And so let me see. Go into. Okay, so let me.
Of course, they don't tell you what they are. That's
no, but I had to go through. I went through all of them yesterday.
Yeah.
And so, oh, good. Here, I get it back. 1 second. Here we go. This is. Yeah, this is banks. Okay. This is okay. So this bank's trading at €2.25, $2.25. Let me see. Yeah, here you go. Okay, so we're 225. This is trading at 1993 levels. This is Banco Popular.
Yeah.
So
they got branches here in the U.S.
Yeah.
You know.
So I mean, is that over the top or what? That is like so sick, it's unbelievable. But, you know, you got to face their problems. Steve Rhodes, Tom O'Brien, you stay right there, folks. Tigress Kate Stallton is going to be coming up next live from beautiful Santa Fe, New Mexico with the Small Cap Roundup. Don't forget, you can test drive our newsletter right here, right now. 2 weeks, absolutely free.
Have a great day, folks. See you in the morning.